Are you a gold and silver investor looking for the most up-to-date forecast? Look no further. In this video, Rafi Farber shares his crucial warning and updates on the current state of the gold and silver market that you don't want to miss. As you know, the gold and silver markets can be volatile and unpredictable, but with Rafi's expertise and deep understanding of the market trends, he has managed to provide accurate forecasts time after time. In this video, he will share his latest insights on what lies ahead for gold and silver prices so that you can make informed investment decisions. Whether you're a seasoned investor or just starting out in precious metals investing, this video is a must-watch to stay ahead of the game. So, let's dive right in. The current state of the silver market. Rafi Farber, the publisher of the Endgame Investor, emphasizes the enduring solidity of gold and silver as genuine forms of money. He firmly believes that the wisest course of action is to accumulate real money that generates capital. In his view, this primarily involves investing in the right mining stocks before fiat currencies like the US dollar inevitably lose their value. According to Rafi Farber, the current monetary system is destined to collapse eventually, and only physical precious metals, which he refers to as real money such as gold and silver, will stand the test of time as reliable mediums of exchange. He predicts that inflation will continue to rise, leading to escalating prices in dollar terms. The silver market is currently under close scrutiny, and one of the key factors to consider is its recent performance around a 50-week moving average. As Rafi Farber guides us through the intricacies of the market, we see that the silver has been in a delicate dance around this crucial indicator, with its current position just below at 320. While some may find the recent downtrend disheartening, there is a glimmer of hope in sight. Rafi suggests that if silver can find support and bounce off the slide, it could signal a positive trend for the precious metal. Despite minor fluctuations, Farber remains optimistic, believing that their downtrend may not persist for much longer, paving the way for potential upward momentum. Another significant aspect to delve into is the open interest in the silver market, which has reached a 10-year low with approximately 115,000 contracts. This development holds immense significance, indicating that many short positions have been covered. Long positions have been abandoned. Rafi Farber sheds light on the potential implications, suggesting that a short squeeze scenario might be in the making. Such a scenario could lead to heightened demand for silver as the supply remains constrained, driving prices higher. With open interest at historic lows, the silver market becomes an intriguing space to watch closely for potential bullish movements. However, amid the market's prospects for an upward surge, there's also a lingering question about the potential for another federal smash in the silver market. As observed in the past, such events can cause temporary disruptions and raise concerns among investors. Nevertheless, Rafi Farber remains steadfast in his analysis, asserting that any potential federal smash would likely have limited impact and be short-lived. His conviction suggests that the overall trajectory for silver points towards an imminent upward movement, while short-term fluctuations may occur. The broader outlook indicates a positive sentiment for silver's prospects. Starting with gold, a notable development is the support zone forming at the old high of $1,923. Back in 2011, this level marked a significant peak for gold prices. Now, as history repeats itself, we find this old high serving as a support level. Rafi Farber points out that if gold can maintain this support, it paves the way for a potential rally beyond the previous all-time high. The formation of the support zone indicates the resilience of gold and its potential to break through the $2,100 mark, promising exciting prospects for investors in the gold market. When it comes to silver, a crucial aspect to consider is the significance of long-term support. Silver's technical analysis reveals its position relative to the 50-week and 200-week moving averages. Presently, silver is showing strength, trading just below $23.40. What's interesting is that the 50-week moving average and the 200-week moving average are closely aligned, reinforcing each other as support levels. Rafi Farber emphasizes the importance of these moving averages acting as key indicators for algorithms and traders, potentially driving more activity in the silver market. The strong position of silver's technicals indicates its catch-up potential, and as gold advances, silver might see a surge in demand and prices. Central bank actions play a pivotal role in the precious metals market. It is crucial to understand how central banks' decisions impact gold and silver prices. As inflation concerns and economic uncertainties arise, central banks often take measures that affect interest rates, money supply, and consumer prices. Rafi Farber highlights the importance of closely monitoring these actions and their consequences to make informed investment decisions in the precious metals market. In Rafi Farber's crucial update on his gold and silver forecast, he sheds light on the significant impact of high interest rates on the job market. One noteworthy development is the positive job gains observed in the private sector, particularly in leisure and hospitality. Recent data indicates that private sector companies added a staggering 97,000 jobs in June, surpassing expectations. Leisure and hospitality industries spearheaded the surge, with 232,000 new hires, reflecting a growing economy. The correlation between high interest rates and robust job gains illustrates how the job market responds positively to a conducive economic environment. Rafi Farber further examines the role of reverse repos in funding treasury auctions and its effect on the money supply. Reverse repos present, or should I say represent, the surplus money printed in 2020 and 2021, which initially had no viable destination in the banking system. However, with a place to invest and generate yields, reverse repos are now being channeled into treasuries, contributing to a significant increase in the money supply. This growth in the money supply can be linked to the rise in interest rates, indicating that higher interest rates may be directly related to the abundance of money in circulation. Contrary to conventional expectations, higher interest rates are surprisingly fueling consumer prices rather than suppressing them. As the money supply increases, so does the potential for inflation and consumer prices to surge. With rising interest rates, borrowing becomes more expensive, impacting consumer spending. The impact of higher interest rates reverberates across the financial landscape, affecting the dollar, the Treasury, and the Federal Reserve. As the Federal Reserve pays interest on all reserves, the increase in reverse repos causes the Fed to lose money, further burdening its balance sheet. Simultaneously, the Treasury now has to pay interest on the increased issuance of treasuries, intensifying its debt burden. The dynamic of higher interest rates and its consequences for the dollar and the Treasury may potentially result in further economic challenges. Enjoying this video? Give it a thumbs up and share it with your loved ones. Don't forget to subscribe and hit that notification bell to stay updated with our latest content. Now let's jump right back in. Rafi Farber's expert analysis reveals that gold and silver are currently in the final phases of their intermediate decline. For investors, this phase is crucial as it can offer valuable opportunities for those who keep a keen eye on the market trends. Farber's keen insights point to the final phases of the intermediate decline in both gold and silver, with open interest reaching a decade low and support zones forming. The stage is set for the potential turnaround in the market. Investors and traders eagerly await this critical juncture, as it could mark a significant shift in the direction of these precious assets. The prospect of gold breaking all-time highs is a thrilling possibility that has the potential to world abuzz. Should this milestone be achieved, it has the potential to cause a widespread panic for real money. In times of economic uncertainty, investors often seek safe haven assets like gold and silver to preserve their wealth. A surge in demand for these metals could lead to a significant increase in their value, attracting attention from both seasoned investors and newcomers to the market. This expectation creates a palpable sense of excitement and urgency in the world of precious metals investing. With rising interest rates and monetary panic on the horizon, the appeal of precious metals as a hedge against inflation and iconic instability strengthens. If you enjoyed this video, guys, make sure to subscribe to the channel, like the video, and watch this one as well.